Hello guys. Today we are going to discuss about a recent CBDT notification on 31st August 2021 where a new rule has been inserted in income tax rule 1962. The rule is 9D and which talks about calculation of taxable interest relating to contribution to a provident fund or a recognized provident fund exceeding specified limit. Before going into this notification, first we understand why this notification has introduced. As recent, as we talk about Finance Act 2021, there is an amendment in Finance Act and Income Tax 1961, which talks about interest on provident fund, which is regards to clause 11 and 12 of Section 10. Let's first we see what clause 11 and 12 say. Section 10, clause 11. Any payment from any provident fund to which Provident Fund Act 1925 applies, okay? So any provident funds in which Provident Fund Act applies means recognized provident fund, or from any provident fund under the central government or notified by central government in the office guided, अगर उनसे कोई भी payment, if any payment is received from that provident fund, any income to the assessee is exempt under Section 10. But following provisos has been inserted by Finance Act 21 with effect from assessment year 2020 22 23. It means previous year 21 22. So what are the provisions? The provisions of this clause, it means any payment, if any payment has been received which is mentioned in the first provision, is not exempt. What are the payments? Shall not apply to the income by way of, if any income to the assessee by way of interest accrued, if assessee accrued any interest during the previous year 21 22 on account of any of a person to the extent it relates to the amount or aggregate amount of contribution made by that person exceeding 2,50,000 in any previous year in that fund on or after first day 2021, and here mentioned computed in such manner as may be prescribed. This is to be highlighted because manner of computation has been introduced by the rule 9D. And what is this? If assessee, in short, if I explain it to you, if assessee has contributed to more than 2,50,000 in a previous year, I mentioned in a previous year, if he contributed exceeding 50,000, then if any interest is received by the assessee on the amount exceeding 2,50,000, are you getting it? Then that interest is taxable in the hand of assessee. For example, if an assessee during the previous year 21-22, because this amendment is applicable from the previous year to April 2021. So if assessee in the previous year 21-22 contributed, assume 6 lakh in as employees contribution to the provident fund, then the interest accrued on the first 2.5 lakh is not taxable as per section 1011. But interest accrued on 6 lakhs minus 2.5 lakh means 3.5 lakh is taxable in the hand of assessee. How the such interest will be calculated and how it is taxable, it will be mentioned in the rules. However, there is also a second provision where a contribution, where if the contribution is not made by the employer, means a provident fund is opened by a self-employed personnel, not an employee provident fund, then such 2,50,000 shall be read as 5 lakhs. Such limit is 5 lakhs. So assume, so as per, so if a self-employed assessee contributed, assume rupees 6 lakh in a provident fund, then interest, we are talking about interest. So interest on first 5 lakh is exempt in the hand of employee, and interest on the remaining 6 lakhs minus 5 lakh 1 lakh is taxable in the hand of employee. Similar is clause 12. So any accumulated balance due or become payable to an employee agar if an employee withdraw, yeah, or gets accumulated balance of the fund, then such accumulated balance is exempt in the hand of employee or the assessee. But similar provisions are added with clause 12 also, where if he gets interest on exceeding 2.5 lakh, then then such interest is taxable, and such 2.5 lakh is read as 5 lakh for assessees for the contribution by such person where there is no contribution by the employer. This is the basic section 11, clause 11 and clause 12 provisions as per income tax amended by Finance Act 2011. Let's talk about what is the manner of computation of such interest. Let's see that. For that, notification has been introduced where the power confirmed by the first provision of section 11 and clause 11 and clause 12 and of section 10, the CBDT has hereby makes the following rules in the income tax rules. So these rules will come effect from the first day of April 2022. It means assessment year 22-23. And the rules are is as follows. For the purpose of the first and second provisions of clause 11 and 12 of section 10, as we have read earlier, income by way of interest, income by way of interest accrued during the previous year, which is not exempt, which is not exempt. What interest is not exempt? Interest on sum exceeding 2.5 lakh as per first provision, and as per second provision exceeding 5 lakh shall be computed as the interest accrued during the previous year in the taxable contribution account. It is the new word introduced, taxable contribution account. Taxable contribution account. Let's see what is the taxable contribution account. For the purpose of calculation of the taxable contribution, taxable interest under sub rule 1, separate accounts within the provident fund shall be maintained during the year and all subsequent previous year to for taxable contribution and non-taxable contribution made by the person. Let's see what is taxable contribution account. First, first let's see what is non-taxable contribution account. Shall we aggregate of if any amount lies on 31st August, 31st March 2021 shall be included in non-taxable. It means any interest on such account is not taxable. Any contribution made by the person which is not included in the taxable contribution account. It means if any contribution up to rupees 2.5 lakh as per first provision and 5 lakh as per the second provision, if assessee contributed up to 2.5 lakh or 5 lakh as the case may be, such amount will be added to non-taxable contribution account and interest on such account will be non-taxable. And third, interest accrued on one sub clause 1 and 2 means this as reduced by the withdrawal by the assessee at any time during the previous year. Now, taxable contribution account. What is taxable contribution account? Taxable contribution account means contribution made by the person in a previous year in the account during the previous year 21-22 and subsequent previous year, which is in excess of the threshold limit. And what is the threshold limit? What is the threshold limit? 2.5 lakhs or 5 lakhs as the case may be. This is the or interest accrued thereon as reduced by the. So threshold limit, here it is written what is the threshold limit, means 5 lakh as per the second provision and 2.5 lakh as on the other cases. So in short, if have to summarize the notification, I have to say the provident fund will now be, every assessee's provident fund will now be bifurcated into two accounts. First, non taxable account and taxable account. From 1st April 2021, if assessee makes any contribution up to rupees 2.5 lakh, such sum will be transferred to non-taxable contribution account. And any sum up to 31st March 2021 is also transferred to non-taxable contribution account. And if any interest is calculated on that non-taxable contribution account, such interest is exempt as per section 11, as per section 10 clause 11 and clause 12. And while contributing during the previous year, if assessee exceeds the threshold limit, it means he exceeds 2.5, his contribution exceeds 2.5 lakh or 5 lakh as the case may be, then such excess will be transferred to taxable contribution account, and interest on such taxable contribution account will be taxable to the assessee, will be taxable to the assessee when during the previous year. Here is written, it will be taxable during the previous year because it is taxable on accrual basis. Are you getting it? It is taxable during the previous year on the basis of accrual basis. So this is the notification number 95 2021. So I hope you all now get the quick brief of the notification, understand what's the new rule 9D for the taxable of interest on the contribution of provident fund. Thank you.